What is up, guys? Welcome back to another video. Today, we're going to be talking about the daily bias, how to determine the daily bias, how to get in line with that bias, and ICT's power of three, and the opening range, and defining what is the opening range. All right, so let's get into the video. So if you see here, we have the daily time frame. Okay, now typically we see the power of three, right? You have your open. And then if we look at the trend here on the daily, what would you say the trend overall on this higher time frame is? Bullish, right? So that being said, if we see the trend to be bullish, and we know that the previous day here on Tuesday, we have this high and this low. Okay, so we mark off this high and this low. Okay, so this previous day's high, previous day's high, previous day low. Okay, so we're looking for price to take out the previous day's high since our bias is bullish, right? So ICT's power of three, we have the opening, then we'll create a low, right? And then we'll create the high, come down, and then we'll end the day at the close, right? So traditionally, we're used to seeing candlesticks like this. If we switch to this, right, you can see here open, low, high, then close, right? Here, if we zoom in, we can see bullish, bearish, okay? So this is where we opened on this day, we had the low, and then we created the high and then closed. Okay, so this is what we're depicting here to the left when we're looking at the daily time frame. Okay, so we're bullish here. We'll make this blue. Okay, we're bullish here. Okay, so the open to the low, right? If we project that up to the opening price, from the bottom of the wick to the opening price, right? If we project that up one deviation, that gives us this level here. Okay. So now from the low to that standard deviation of one, this is now your opening range. Okay. So if you can't get any positions here, anywhere in here, as long as it doesn't go run on you, and you can look to enter in this whole range. Okay. Now, what are you going to want to look for in this opening range? And before we get into that, if you are looking to take trades with us live, join the mentorship down below. One-time payment, $59.99. Get in there. It's a limited time discount. One-time payment. The price isn't going to go up to a monthly subscription. So December 4th, this Monday, we're going to be starting the boot camp for December. Okay, so we're going to go every Monday in the morning. In-depth topics. We're going to go over all of these here starting on December 4th. We're going to go to January 1st. We're just not going to do Christmas Day, of course, but if you get the boot camp, you get the boot camp plus the Discord included in here where we trade live. Okay, if you want just the Discord mentorship, this is just one payment. We trade Tuesdays through Thursdays, live trading, weekly webinars. Or if you want to grab the trading master course, this is going to get everything. This gives you the mentorship and the trading course. And if you, for right now, if you buy the course right now, I'm going to throw in the bootcamp for you. So get in here, one-time payment, lifetime access, and we're helping people get funded. And a lot of people are finding consistency and profitability in our Discord. So go ahead and click the link below, and we'll get back into this video. Okay, so we're anticipating higher prices here on the daily time frame, right? So we are going to want to look inside of this opening range for a PD array that lines up for us to enter to take out and continue this bullish movement, right? So we go to the next day. We're going to go Wednesday. Go down to the 5 minute. We're going to want to look at 6 o'clock here. Okay, so 6 p.m. Here's our open. So opening candle, we're going to delineate this opening price cross. Okay, we're going to make this orange and type it out, opening price. Opening candle price. Okay, so as we run into Asia, anything below here, we're going to want to become a buyer. Okay, so we're anticipating the previous day as our draw on liquidity, right? So this is going to be our buy side liquidity. So let's make this here, buy side liquidity. Okay, and then this is our previous day's low. So we are going to want to go to our trading time. Okay, so here we are on Wednesday. We're going to want to move price forward. Okay, so here we have London. From here on the hourly. So we have Asia in here. We drop down. This is our central bank stealing range. So see, Asia drops down. Midnight opening price. We're going to want to trade. I like to trade New York session, but if you are a London trader, you can be looking to take prices and buys down here at a discount, right? So here on the 5 minute, we can see we dropped down, Asia down, shifted up, right? Market structure shift. Now we want to buy in a discount. So if we take this range from low to high, ICT OTE, 79 level comes down here. So anywhere underneath 50%, you want to be a buyer. So 79, we have a 5 minute gap in here, 5 minute gap in here. So you can be a buyer anywhere in here. Long in there, stops below the low. And then we can target the Asian highs. And boom, take profit hit. Okay, so there's London, right? We're looking for bullish prices underneath the opening candle, confluenced or combined and lining up with lower time frame, market structure, and PD arrays, right? 5 minute PD array. And here also lines up with the OTE optimal trade entry from this low to high. We retrace. So let's move into New York. See, we go higher, drop back down. Morning session here. We took out the previous day's high. So now we would probably be looking for some sort of bearish action to be taken, right? So this low is pretty nice here. We have this 5-minute gap in there. Respects 50% right there. Heading into lunch. Nice drop down. So now we have this gap here. This is our next draw on liquidity. Taps in there. Be short here. I would want to go probably just above this high. Then target this low here. Heading into the end of the day. And we just can't close in there. So nothing really there. Maybe on the 1 minute, we could have caught something up here. 5-minute across. Market structure shift here. 1 minute fair value gap in there. Short stops above the high. And then we can target these lows or target this low here, down here. Relative equal lows right there. So this low here is pretty clear to this low. And here, relatively equal lows there. We tapped in, nice 1 to 6 RR there. So this day, of course, it's not always going to line up with maybe your session. Like if you trade the New York session, here the entry happened during London, but the premise is still the same. Okay, so if we go to the daily time frame, and let me show you this here. Let me pause this real quick. All right, if we take the low of the day here, right, we have our low of the day down here. Okay, let me hit shift here. Low of the day. Okay. Now, if we take our Fibonacci and we take the low, we project the low to the opening candle price using standard deviations. Okay. We can look to try to get in anywhere from this -1 standard deviation. Okay, so this whole area from the low to 1 standard deviation, this is now our opening range. So from this low to this area, we would want to be looking for buy entries, right? Which gives us this whole area right in here, which consequently 50% is right in here. So we got lots of movement. You could have been a buyer here on this gap as well, or just outside of here. Okay. So that being said, until next time, guys, don't forget to hit that like, comment, and subscribe. Join us in the Discord to trade live with us, and let us help you find profitability that you deserve. And until next time, guys, trade safe.